Hey, good morning, everyone. It is Saturday, October 21st, and I want to talk today about momentum. And this is really the central thing that I've been working on for the last couple of years, um, trying to master when the entry signals are best for trading and how to define those time frames. And for me, what I have learned, it's all about mom. It's all about momentum. And I wanted to talk about this again today because Friday, or Thursday or Friday, I think it was Friday, Robert Arnott on Bloomberg said that momentum investing no longer works. And I nearly fell off my chair. It's like, what? Maybe he doesn't understand momentum. So I'm not trying to say that um, well, I guess I am trying to say I disagree respectfully, Mr. Arnott, and I want to show you my case about why I think it is all about using momentum. And maybe after we look at a few things, you'll change your opinion. And we are all trying to go through trading and understand what we're doing. I've used the NinjaTrader platform and BloodHound, and I think it's much faster using BloodHound than it is coding. I certainly can do every single thing that you can do coding with this software, but in a heck of a lot faster time and a heck of a lot, I mean, for every application, back testing, creating a strategy, anything I want to do, this software is phenomenal, and I hope you give Shark Indicators and NinjaTrader a look for that reason. Let's look first at why I started concentrating on momentum. Momentum is change. It's the rate of change on price. And William Blau, in his book, focuses on the two most important elements, momentum and direction, and he added divergence to that. Um, so when you have a trading strategy that uses, for instance, MACD, that is not a leading indicator. That is an indicator that tells you what has already happened in the past. So you're late. You're late, late, late. And if anyone is using MACD in a trading strategy, you're probably not going to be happy with your results because it's late. You want to be on top of those signal changes, and so you can directly work with that rate of change, the momentum, once you understand what you're doing. And this book, let me show you the cover. It is Momentum, Direction, and Divergence. And it is a fabulous book. It shows how Blau smooths momentum that does not create lag, but you need a little bit of algebra to understand this book. It The way he uses it encapsulates price movement for defining these envelopes and finding when that flip occurs and it's going back down, up and down. And it's a fabulous book. Um, I think that you would get a lot out of it, understanding rates of change and how he has worked with these indicators. Um, I have learned a lot from my trading about using momentum and finding these areas of when to come in and approach price at that right time to get into a trade. And so that's what we're talking about. So the book is William Blau, Momentum, Direction, and Divergence. Get it on your Kindle. So I have a weekly, daily 60-15 higher time frame trend that I'm looking at, and I have momentum on my chart. And here I put a little simple mom indicator on a BloodHound template, and let me break the components down for you. Here's raw momentum. So as you can see in the NASDAQ, we have an upward sloping trend. We're coming to our standard deviation level. That's what contained price and held it in. Now we broke that level and we're pulling back. So we're setting up our sweetheart trade. So when you break a volatility level and you do that first pullback, and if we get another long candle with momentum going back up, that's the trade that I always tell you guys, that's the one I want. I want that volatility break, that pullback, and then the launch. Those are my favorite trades. But here on the daily, we got stopped on the top, and now tiny breakout and a pullback. So as you can see, the momentum is coming down. This is a momentum indicator. I just express it as a bar instead of a line. And I've put the color slope EMA so that you can see. I cheated and used that EMA color slope on my momentum bar to express visually what you're seeing on the momentum. Very tricky, huh? So in an uptrend, when you have like a forward sloping 200 EMA, you want to take these entries when you can, get them back in the direction of that higher time frame trend on that momentum change. And you don't want to be trying to hit your longs when it's pulling back. So right now we're in a pullback. So what you would do in an uptrend, if you were to try to do a reversion to the mean strategy, is you would be selling your tops until this turns around and goes back in your direction. Also, you can see timing on this for divergence. When you have a higher low in momentum, but you come back for your test of your low, and then you get a bar change in the direction of that overall trend, that's the bar you want to get behind, because that's going to be the winner chicken dinner. And look, it just shot up from there. So timing entries with momentum can be an extremely profitable thing to do, especially since we all want to get long or short on these tops or bottoms. So the algos come in and buy these bottoms, especially on a Bollinger Band in an uptrend. That's what you're supposed to do. You're supposed to sell the tops and buy the bottoms. But in an uptrend, you just want to be buying the bottoms, not necessarily selling the tops, because it can break out and go long. So when you tie this in with bar direction, you can get an idea of when you should be trading and when you should get out of the market. Let me take my drawing objects off. So you can see right here, we have no signal. So this is not an ideal time to be in this market, up or down. Here was the retracement. Wait for your signal to go long, tuck your stop, and then there you go. Here was the signal, and then it got stopped out on a stop run. It happens. They came back for it, but you were in a very low band here compared to an expansion band. And you can see when the bands are expanding because they get bigger. So when you can see that the bands are expanding in your direction, that's when you want to be taking this on the lower time frame and really be hitting the trades in here, albeit for a very short time. You make the most amount of money in very short amounts of time trading, unless you're trading in China. I don't know. I don't think they're allowing the workers to trade anymore like they did back in 2012. They opened up the Chinese stock market to the average manufacturing worker, whatever, just the normal worker people, and they gave them these micro shares, and everybody did the same thing. They shorted or they went long. They just went one direction. And so that propelled the markets directionally. So you could just directionally trade, and then they all got together and realized that that was a big mistake. So they took, I think they've taken that away from the normal average worker now. And you have to have a regular trading account or something. But for a while, they were directionally moving the markets over there because they just went in one direction. Wouldn't that be nice instead of all of our algos that go up and down, up and down, up and down, where you can't get a feel for a directional movement? Right now, we're in an uptrend in the NASDAQ. There's no reason to start shorting this, even though you've got direction or momentum coming off. Because this is raw momentum indicator that I've created in BloodHound. We've got momentum coming off, but it has not followed our bar direction yet. And we can look at this on a smaller time frame to help us trade this. For instance, let's look at a 30-minute chart first. You can see how they tried to get this to go down, and then the buyers stepped back in and bought those bottoms like you're supposed to do in a downtrend. But here on the 30-minute bar, we've got that upper volatility level that's been holding price just above the yesterday high. So we've got price contained in a range between this volatility level and this close. So I really wouldn't do anything in this market until price either breaks above this or below this, and this being 6098 and 6125. Otherwise, you're just likely to continue going sideways and bashing your head in like we did Friday. You can't really trade sideways unless you buy the bottom or sell the top, and that only lasts for so long. But using momentum will help you understand when do I get in these trades. And you see on my indicator here, my momentum indicator, that even though you've got your moving averages going long, it didn't really work because the rate of change started coming off. And so when you use a direct momentum indicator to show you what price is, to show you what price is actually doing instead of what it did in the past, MACD, this would have all been looking back. This is a leading indicator. Another thing that you can see is the divergence. You can see momentum coming up, but they're trying to hit these lows. So when you get down here and you can set your trading strategy to enter on these lows, because momentum is higher low, you've got a lower low on price but a higher low on momentum. That's called divergence. And you're in a long-term uptrend on your daily. That's exactly why those algos are kicking this in and buying those bottoms and bringing it up. But we're running into this top volatility level that's your standard deviation, and so it was running into a ceiling and it can't get past it. That's why I use these volatility levels on my charts. I keep telling y'all guys, you don't understand, this stuff really works. So until we break above this level, the volatility level, or below that close, we're not going to have a directional picture. And the market has been so overextended that I presume that we're going to get our sweetheart set up, and this is going to come back down and do a retracement on this higher time frame. Possibly, I mean, I'm not saying but here's your upward sloping moving average. So this, keep your eye on where this is pointing to right now. It's 60.18, and your lower band is 58.94. So there's, or 58.96, whatever that is, 59.08. Well, here, dummy, let me turn the price things on and we can see exactly. There we go. 60.1650. We want to be either above the level 61.39 or a bounce in the direction of that higher time frame trend here at the middle point 60.16, or at the lower level 59.08 for a resumption of the trend. It could try to get back down to this, 200 EMA. And I'm not saying that this is, I'm not saying I can't call a top, but when you're in such a long trend, especially if we get our tax reform that goes through, this is likely to continue moving all up, even though people are waiting for the tech wreck. Right now, just because we have a little bit of momentum coming off does not mean that this trend is over by any stretch of the imagination. We just have hit a ceiling on the volatility, and momentum is coming off. As you can see, when it gets up there, it pulls back. But it did break it, so I'm expecting for it to pull back, giving my sweetheart set up. And then I'll be looking to resume the trend as soon as I get momentum with an up bar on the daily. Does that mean that you can't trade intraday? Of course not. If you like trading the NASDAQ, there's no better indicator, in my opinion, than the NASDAQ for consistent trade opportunities, because this market moves so well. You get multiple opportunities of finding entries up or down for short-term day trading. You want to be able to identify when the moving average is flat and stay out of the market. You want to enter on a sloping moving average up so that you can come in here and take your inflections long, get some points, get some ticks. And if you know how to add your position size when that condition occurs, then that's how you day trade, because you're trading for ticks. If you're day trading, you're not really trading like an investor, um, timing it like you do on the daily. You're just trying to get your daily money and get in and get out, make a couple of $100 a day, and you have 100,000 by the time you get to the end of the year. Um, again, there are plenty of chances to trade intraday, even though you don't have a signal at the current time. You can trade down. I mean, grab these, just set inflection short. I have it set up so it won't take it when it goes flat, but only will take it when that condition comes. And you can see the condition. You are sloping down, and you've got movement. I mean, this was late in the day. This is near the end of the close, as people were taking their money off the table going into the weekend. So wait, time your trades, grab some ticks, learn how to wait, identify the most favorable movements to get active in a market, and then know what kind of market you're entering on, and where you are. If you can time your trades from September 27th through October 17th long, what are you going to do intraday? You're going to be buying any bottom that you can on that Bollinger Band, on a 15-minute chart or on your lower time frame. But so let's take a look at this real quick. So that you can get this in your mind. Can't find my date. Here's October 3rd. All right. So anytime you can get, that's why the algos are kicking off on these bottoms, because you're below your Bollinger Band and they want to position themselves back up in the market. Here's another one. Get dips below the Bollinger Band and you see those wicks. They're buying the market back up. Here's other ones. Dipped below the Bollinger Band. Wait for the candle to turn, or you get the reversal on your momentum. Do you see how this bar is an inside down bar, but the momentum has flipped up? That's just as valid as a signal as if it were a white candle. Go back up. So yes, Mr. Arnott, you are not right. Mr. Robert Arnott, you are not right on our momentum strategies dead. Of course they're not. I mean, you can see what I'm talking about right here. Dip below the Bollinger Band, go back up. In that uptrend, here, look at all these. So y'all are starting to get it. And use my other templates to help you time your trades. Otherwise, we're just hitting that ceiling right now in that daily, and this looks like it's setting up for that lower pullback and give us a chance to take this long again after that. So this is Julie, J Auto Trading Strategies, and I would not know what to do if I did not have momentum. I've just been able to recreate it in a visual manner that makes sense to me, and I'm glad I had this opportunity to show you how to use it. Here just on a tick chart, look, you've got a lower low, but your higher low momentum. And when you're in an uptrend, what do you want to do? You're below your bands. Below your bands, you wait for those and just take those all day long. Bread and butter trades, day trading. All right, guys, y'all have a great weekend, and we'll talk at you soon. Thank you.